I've spent tons of hours analyzing some of the most popular dividend ETFs on the market, and the results will surprise you. Now I'm going to be taking a look at the top 10 dividend ETFs and seeing which one could be the one that you want to add to your portfolio. And one of the most popular ones didn't even crack the top 3. Alright, let's get to it.
This video is purely educational content. It should not be considered personal finance advice. I'm not a licensed financial advisor, and I don't know your financial situation, risk tolerance, or even investment goals. Past performance doesn't guarantee future results, and always do your own research and consider consulting with a qualified financial professional before making any investment. Alright, let's get on to the video.
Hey guys, my name is Steve, and I run the Frugal Expat website where we try to help people to save more and invest better. And today we are ranking the top 10 dividend ETFs that you could add to your portfolio. Whether you're wanting to add income to your portfolio or even having some steady cash flow, these dividend ETFs could be something that you want to add and maybe want to invest for the future. So we're going to break them down and have certain criteria and how we're going to rank these. First of all, we're going to take a look at the total performance. This is going to make up about 30% of the ranking value. So it's going to look at the 5-year annualized return and even performances of up and down markets. So we're going to look at that. Factor number 2 is going to be dividend sustainability. This is going to take up about 25% of the ranking. We're going to be looking at dividend growth, company sustainability and quality, and the payout ratio. Number 3 is going to be income and yield generation. This is going to take up about 20% of the ranking. So we're going to be looking at dividend yield, consistency of the yield, and the tax efficiency. Factor number 4 is going to be the diversification of the holdings. So that's going to look at number of holdings. It's going to look at risks and sector concentration. And lastly, number 5 is going to be cost and efficiency. So we're going to be taking a look at the expense ratio and seeing if it really matches what it returns. So we're going to be breaking these ETFs down. We're going to be showing you guys the 5-year annualized return. We're going to be looking at the 5-year growth rate of the dividends, the yield, how many assets under management, and how these kind of perform in the strategy of each one. And we're going to show you guys if this one could be one that you want to add to your portfolio. Now, not all of these are going to be equal, and so you guys may also disagree with my rankings, and you may be ranking maybe dividends and income way higher than performance. As a young person, I think performance is a good metric because we want to see our portfolios grow over time and not have huge NAV erosion. And so we want to see this kind of continue to grow, because as you may see that some of these don't grow as fast, and some of these may have big dividend yields but low performance. Some of these may have high performance but low dividend yields. So we're going to be ranking these and seeing which ones is number 1. Alright, let's get to it. Number 10 is going to be Noble, N-O-B-L, and that is the ProShares S&P 500 Dividend Aristocrat ETF. Now, this one tracks some of those most elite companies that are continuing to grow their dividends over the last 25 years, and that could be anywhere between adding, like, increasing it by 1 cent, which is could be a lot, could be less. And so this one tracks some of those top companies in the S&P 500. Now let's take a look at some of the facts of this ETF. Now this ETF's got about $10.8 billion in assets under management. The expense ratio is 0.35%, meaning it costs $35 for every $10,000 invested. The dividend yield is sitting at about 1.8%, and the 5-year return is about 8.10%. So this one is okay. I mean, it's not the best, and that's why it's ranked number 10. It's got a 1.8% yield, so it's definitely not the best on this list. The return is only 8.10% over the last 10 years. I mean, so it's only averaging 8.10%, and that's not really that great. But it also has a dividend growth rate of about 5.45% over the last 5 years, so it's not really growing its dividend that much either. Now, it's ranked number 10. It is ranked number 10 for a reason, because it's not the best, and it's definitely the worst on this list. And so we had to start someplace, and as the expense ratio is really high, the returns are very low, the dividend yield is very low, and the dividend growth rate is not that great. So, should you invest in this? Well, that's your choice. For me, I'm looking for a better performance and a better yield, and so this one is not in the ones that I want to invest in. Our next ETF, number 9, is going to be SCHD. Now, SCHD is the Schwab US Dividend Equity ETF. Now, SCHD tracks the Dow Jones US 100 Dividend Index. It's got 100 different holdings. It's been around since late 2012, and this one has been like a gold standard for many people. And many people are going to disagree with me why it's number 9, but I'm going to go over some of the facts. Now, this ETF does have some great measurements when it's looking at companies that have been paying for about 10 plus years. It's looking at ones that have a good payout ratio. It's looking at ones that are growing its dividend. And so you would expect it to be higher on this list, but let's go over some of the facts that may be drawing it down. First of all, it's got a 10-year average return of about 9.13%. Now, it's pretty low on this list, and it's not as low as Noble, but it's still pretty low. It's got an expense ratio of 0.06%, so it only costs $6 for every $10,000 invested, so it's pretty cheap. It's got a 3.76% yield, so it's got a pretty good yield. Now, the dividend growth rate for the last 5 years is 9.15%, so it's got a pretty good dividend growth rate. But what's kind of throwing it down is that performance. Now, we're putting a heavy weight on the performance, and this is not the best performance overall. It's not even the best dividend growth rate overall. Now, it's been around for a good long time, and so it's been growing its dividends. It's did pretty good from 2012 to about 2022, but from 2022 and on, it's just not done that great. And so that's probably why it's bringing down the performance. It gets rid of some of the good ones and that you would want, like Broadcom. It got rid of Broadcom and bringing in some more energy, and so you're hoping that it does better when people are putting more money into value. But this one, it's just kind of not capturing some of the upside of the rest of the market, and so that's why some of the other ETFs on this list are going to outperform it and possibly have a better dividend growth rate than SCHD. You may want to disagree, leave a comment and we can talk about it. All right, let's get on to number 8. Our next one's going to be SPYD, which is the Spider S&P 500 High Dividend ETF. Now, this one tracks about 80 different dividend paying companies on the S&P 500, and it weighs them equally instead of doing it market weighted. Now, this one could be a good one to add if you're looking for some high yield, but I mean, it doesn't grow its yield that much. Now, it's got an expense ratio of 0.07%, which means it's pretty cheap. It costs only $7 for every $10,000 invested. It's got a yield of about 4.35%, which is the highest on this list. It's got a 5-year average return of about 9.89%, so it's almost to that 10% mark. And it's got about a dividend growth rate of about 3.7% over the last 5 years. So it's not really growing its dividend that much, but it's one of the highest on this list, and it's a great dividend ETF that you could add to your portfolio. It's got a huge concentration of some of those best high-paying dividend companies, and so this could be one that you want to add to your portfolio. And the reason why it's sitting at number 8 is because it's outperforming number 9 and number 10, which is SCHD and Noble. And so let's move on to our next ETF. Our next ETF is going to be HDV, which is the iShares Core High Dividend ETF. Now, HDV tracks the Morningstar Dividend Yield Focus Index. And so what it's doing is it has about 75 different holdings that's tracking high dividend paying companies that are in sustainable dividend payout sectors like financials, like energy and utilities. And so it's got about 75 different holdings making up this portfolio. Now, the expense ratio is 0.08%, so it's a little bit more expensive than SCHD and SPYD, but it's still about $8 for every $10,000 invested. The yield is sitting at about 3.03%, so it's a pretty good yield. Now, the 5-year average growth of this ETF sitting at about 10.89%, so it's doing pretty good compared to the last 3 ETFs. Now, the dividend growth rate of the yield is about 1.35%, so it's not very good on growing it for the future, but it still has a pretty good yield. It's got a better performance than the bottom 3. Now, this one could be one for your portfolio. It's got a high performance. It's got a pretty good yield, about 3%, and sometimes it ranges up to 3.5%. And this one beats out the others in performance alone, and it's also got sustainable dividends. So you got some good dividends, you got some good performance, and you also got a cheap expense ratio. And so this one could be one, as it's sitting at that mid-tier range of the dividend ETFs, and so it could be one that you could add to your portfolio. Let's go on to our next ETF. Our next ETF is going to be VIG, which is the Vanguard Dividend Appreciation ETF. Now it tracks the S&P US Dividend Growers Index, which tracks some of the top fast-paced growing dividend companies in the country. So we're not talking about the highest paying dividend ones. We're talking about companies that have been paying a dividend for the last 10 years and that it's continuing to grow that for the future. And so companies like Microsoft and Apple are part of this ETF because they're growing their dividends every single year and it's doing pretty good. And so what you're going to see is you're going to see a lot of growth performance wise, but maybe not the dividend yield that you may want, but it's still looking at the ones that are growing it for the fastest for the future. And so that may not be those sustainable industries like utilities and energy and financials, but these are some of the companies that continue to grow for the future. So this one's got an expense ratio of 0.06%, meaning it costs $6 for every $10,000 invested. The annualized return of the last 5 years, the average would be 11.37, so you're still growing your money pretty well. Now the dividend yield is sitting at 1.6%, which is not very good, but the dividend growth rate of this is 9.15%. So it has a dividend growth rate similar to schd. It doesn't have a very good yield compared to others, but it's got pretty good performance. So if you're wanting to grow your portfolio and still have a pretty good dividend growth rate and a good dividend yield, VIG could be one to add to your portfolio. Now, some of the trade-offs with this ETF is, of course, you're going to get some great performance, but you're not going to get that much yield. And so that's kind of the trade-off. That's why it probably ranks number 6 on our list, because it's not getting the yield you want, but it's still getting pretty good performance. And it's also at rock bottom prices because Vanguard tries to make sure everything's pretty cheap, and so it could be one that you want to add to your portfolio. Hey guys, if you have found value in this video, make sure to hit that like button and subscribe. And one of my favorite places to track my portfolio, see my dividends, and seeing kind of how these grow over time and how much income I'm getting is Snowball Analytics. Snowball Analytics, I've been tracking my portfolio with since February 2025, and it's a great place to create goals, see how much income you're coming with, see when ETFs and even dividend stocks are paying you. So this is a great place where you can track your portfolio. Now I'm going to leave a link in my description and my pinned comment, so if you want to sign up, sign it up. Also, you can use the promo code, the Frugal Expat. This will also give you a discount when you pay for the paid version. Of course, there's the free version, so you can sign up for whichever one you want. And this is also affiliate link, so I may receive a commission for it, but it's at no cost to you. So remember, Snowball Analytics, promo code, the Frugal Expat, and link in the description and pinned comments. All right, let's get back to the video. Our next ETF is going to be DGRO, which is the iShares Core Dividend Growth ETF. DGRO tracks the Morningstar Dividend Growth Index, which selects US companies that have been growing their dividends consistently over time, and the minimum requirements is it has to have a 5-year growth rate. Now with DGRO is one of the more famous ETFs out there. You got DGRO, you got schd, but DGRO is a little bit more higher on this list because of performance and because it's got some pretty good yield and some good dividend growth. Now with this ETF, you're getting a 0.08% expense ratio, so it costs $8 for every $10,000 invested. The dividend yield is sitting at about 2.03%, so it's not the highest and it's not the lowest on this list. It's got average overall total return of about 11.55% over the last 5 years. So it's doing one of the best on this list, and it's got a dividend growth rate of about 7.11%. Now, it doesn't have the highest yield, it doesn't have the best dividend growth rate, but it's got a really good performance of 11.55%. So if you're looking for an ETF that continues to grow its dividend, has a pretty good dividend, and it's got one of the best performances on this list, DGRO would be that ETF to buy and hold in your portfolio. So it's got a good balance between performance and income, and you are getting a great one if you want to add this to your portfolio. All right, let's get on to our next ETF. Our next ETF is going to be DIVB. Now, DIVB is the iShares Core Dividend ETF. It's a little bit different than DGRO. It's also a little bit newer. Now, DIVB tracks the Morningstar US Dividend Index. Now, this index tracks those companies that are consistently growing their dividends and also those companies that are doing share buybacks. So it's a little bit different. So it's going to have a little bit different things than DGRO. Now, the reason I like this one is because it's consistently growing its dividend more. It's got a higher dividend yield than DGRO and some of the others, and it's got a pretty good performance. So let's jump into some of those numbers and see what you like and what you don't like. Now, the expense ratio is 0.05%, so it's one of the cheapest on this list, or the cheapest. It's got a dividend yield of about 2.43% and in a 5-year total return average of about 12.07%. So this dividend yield is pretty good. It's a 2.43, so it beats DGRO. It's not as good as schd. It's not as good as HDV or SPYD, but it's pretty good. And it's growing it at about 13.97% over the last 5 years. So it's growing it faster than everyone on this list. And so that puts it really at the top for me and at the top of these rankings. It's got a good performance, 12.07%, beating the last couple ETFs. It's got a pretty good yield and it's got a pretty good growth rate. Now, it hasn't been around so long, but it is one that's growing and continuing to beat out some of the big dogs. And it's also got the cheapest expense ratio on this list. So if you're looking for a good ETF that's dividend focused, that's got a good performance, that has got a cheap expense ratio, and it's also got a pretty good yield that's growing faster than all the others, DIVB could be the ETF for you. All right, let's get on to our last three, which may surprise you on some of these other ones. Let's get to it. Number 3 on this list is VYM, which is the Vanguard High Dividend Yield ETF. And it tracks the FTSE High Dividend Yield Index. Now, it tracks some of those US companies that are paying above average high dividends, and so you're getting some good companies. Now, it is excluding REITs, and so don't think that REITs are a part of this ETF. So it's going to be pretty good, and it's going to have a good bunch of different companies, anywhere between 500 to 600 different companies, just depending on when you watch this video. Now, it's got an expense ratio of 0.06%, costing $6 for every $10,000 invested. So it's got a dividend yield of about 2.36%, meaning it's not the highest on this list, and it's also not the lowest. It's got a 10-year average return of about 12.30%, so it's one of the highest on this list, and it's doing pretty good. And so if you're looking for some good performance and a pretty good deal, this one could be it. So VYM is one that I'd like to suggest if you're looking for some classic dividend ETFs, because it's got great performance. It's got a pretty good yield, and if you're not chasing yield, this one could be one that you could add to your portfolio. Plus, it's quite cheap with the expense ratio. All right, let's get on to number 2. Number 2 is going to be a powerhouse one. It is VYMI. Now, VYMI is the Vanguard International High Dividend Yield ETF. This ETF, a little bit more expensive than most of the other ETFs on this one. It's a little bit different because it's international, so it's tracking a lot of international developed countries and some of the ones that are in emerging markets as well, but it's looking for high dividend paying companies over the international market. Now, it's got about 1,500 different companies, so it's quite diverse. It's got a great performance, it's got a great yield, and a great growth rate. This one could be number 1 for many people, or it could be number 2 as my rankings are going. Like I said, I've ranked these based upon, you remember, performance, and then so on and so on. And so let's get down to the performance and some of the facts of this ETF. Now, this ETF, like I said, it's got an expense ratio of 0.17%, meaning it costs $17 for every $10,000 invested. The dividend yield is 3.51%, so it is doing pretty well for a good dividend yield. It's probably 3rd highest on this list compared to if you had SPYD would be number 1, and then schd number 2, and VYMI number 3 on dividend yield alone. Now, the performance over the last 5 years is 12.39%, so it's doing pretty good for the performance alone. So it's got good yield, a good performance, and you know, it also gives you some different diversification. Instead of being in the US market, it's also in the international market. The 5-year dividend growth rate is sitting at 11.10%, so it's growing its dividend pretty good, and so that's one reason why this could be one to add to your portfolio. Now, if we're looking at reasons why it's number 2 on this list, it's got a high performance, it's got a good total return, it's got a very good yield, and it's growing its yield over the long term. So this one could be one of the best ones that you want to add to your portfolio. And watch out, we have one more, and this one probably has one of the best performances. It's got a pretty good yield, and let's get to it. Our last ETF, number 1 on this list, is fdvv. fdvv is the Fidelity High Dividend ETF. Now, fdvv tracks the MSCI USA High Dividend Yield Index. Now, this one tracks a whole bunch of different companies that have above average dividend yields. And what I like about this one, it's got like a barbell strategy of income plus also growth a part of this. So you're getting a lot of technology with this ETF, and so you're gonna have a lot of growth. I mean, there are technology companies that pay dividends like Apple, Microsoft, and Nvidia is also paying dividends. So you're getting some of the growth with a lot of some of these tech companies like Microsoft and Apple. You're also getting some classic dividend paying companies, and so you're getting a lot of income, you're getting a lot of growth, and that's why this one is number 1 on the list, because it's got a high performance. And in the long run, if you want your money to grow and have a pretty good dividend, fdvv is one of the best ones out there. Now, it has an expense ratio of 0.15%, and so it's not the most expensive on this list. And so it costs about $15 for every $10,000 invested. The dividend yield is sitting at about 2.81%. And so it's not the best on this list, but it ranges all the way up to 3%, just depending on how the market goes. Now, the 5-year average performance is 14.91%. And so it is the highest performing on this list, and it's doing pretty good in the long run. It also has a 5-year dividend growth rate of about 9.80%. So it's beating schd on growth, and it's got a pretty good yield. It's got a great performance at a lower cost, and so this one could be one that you could add to your portfolio. Now, numbers don't lie, and the reason this one is number 1 instead of like an schd or vymi is because fdvv is performing 2.5% better than vymi. It's performing about 6% better than schd, and these are on average of 5 years. And it's also got a really good dividend yield. And if you want to do just portfolio balance alone, fdvv wins, and you're still getting a pretty good dividend. So these are the reasons I picked fdvv being number 1. It just went along with the rankings, and vymi may be my favorite one. So these are some things to think about. Let me know in the comments, what's your favorite dividend ETF? And you may disagree with me on all these rankings, and that's okay. You may value dividend yield above all else. I valued performance because I believe that I want to grow my portfolio for the long term. Let me know in the comments which one is your favorite, and check out this video on the best growth ETFs. Alright, and I'll see you in our next video.